Financial is one of the worst performing sectors today, being led to the downside in part by Charles Schwab. Those shares under pressure after a very rare double downgrade to underperform at Bank of America. We've made it our call of the day. You might recall that Carrie Firestone made it one of her stock summit picks. She can't be with us today, but she has sent us a note that I want to read to you. She says it's outperformed most financials, perhaps the analysts being very price conscious. Although it still trades at a 16 PE on next year's earnings, the concern is interest expense on deposits. I think they must be overly worried given interest rates are coming down over the next few quarters. So at least we wanted to get that to you because it is having an impact today. Bryn, what do you make of this? It is a rare double downgrade for any stock, but let's talk about this one.
Well, first of all, Schwab is a great company. We all know that. They're the largest, if not one of the largest custodians. But you have to understand 60% of their revenues are dependent on interest rate sensitive sectors like margin loans. And so I think as the Fed has been very aggressive, which is not a secret, but if we get 1 or 2 or even 3 more hikes and then they pause, that's still going to hit their revenues because they are so interest rate sensitive. So I think if you wanted to play financials, I would look at more of an asset management firm, less interest rate sensitive like a KKR or a Blackstone.
Weiss, how would you answer that question?
Yeah, I mean, look, it's clear it's a derivative of the rates market. And I was looking at a chart, and it's not a one-to-one correlation as the analysts would have you to believe, didn't say, but have you to believe, inverse correlation with rates. However, I think there's another issue here, and the other issue is that you've got treasuries, which are now extremely competitive with what you can do in the market and what Schwab will offer you that are also tax advantage. So that's a concern of mine. I don't think it's a double downgrade material. That generally happens when there's an event that causes the entire thesis to be, to change the underwriting of it. I think it's a great company, great long term. I'm not buying it here, but if it went down, maybe another 10, 15%, I'd be tempted.
But how would you put it into the context of a Schwab versus a money center bank,
right?
A private equity
less risk
stock.
in the model, less risk in I don't mean risk in terms of macro risk. I mean in terms of underwriting risk, what they do, NPLs, et cetera. Their loans are collateralized. So I think it's better from that standpoint, deserves a higher multiple.
Jimmy the Bull?
Yeah, I like that. Thank you. Look, Schwab's a fabulous company. Like Bryn said, we use it as well. The double downgrade, Steve's right. I mean, that's a pretty aggressive call, and I understand what they're doing with the interest rate sensitivity here. But the question I have is that not known by the market right now? I think it is known by the market right now. I can't tell you what multiple this should trade at. And as viewers know, I'm more akin to the money center banks and the investment banks. That's where I just see a bigger macro bet, which everybody knows what mine is, what my outlook is for the economy. And if I'm right, then there's going to be a bigger impact in those banks than there will be in Schwab.
They just suggest you're going to get more, opportunity to outperform in Owl, KKR, as Bryn mentions, Ares. Amy, how would you advise people to take this downgrade and how they look at this space?
Well, we're slightly underweight financials, and we're pretty comfortable with that. If we're going into a recession, Steve's view of the world is at all correct. It's going to be tough for the sector generally. So we're in sort of the more defensive financials, like a Berkshire, will serve you well. We don't own Schwab. We haven't owned it for a long time. Just looking at that PE of 17 for Schwab, though, is pretty compelling. So if it continues to go down and a little bit of time passes and the economy holds in, I would look at the name.